Welcome to the Explainer. You know, every single time you tap your card or see that paycheck hit your account, you're kicking off this incredible chain reaction. So today, we're going to follow the money. We're going to see how one simple transaction connects you to this huge global system. All right, let's dive in.
Yeah, it really all kicks off with something super simple, something we do every single day. You know, buying a coffee, paying a bill, getting your salary. These tiny little actions, they're like the sparks that ignite this massive, invisible engine that runs the world.
Right, because the second that money leaves your account, it goes on this wild journey. It travels to a system that links you to businesses, to other people, even to entire countries. So what's really going on there? Okay, let's start at the very beginning.
Okay, so we're going to start right where it all begins for you, at your bank. We're talking about the stuff you see and use all the time. But trust me, this is just the very, very tip of a giant banking iceberg.
Think about it. Your bank gives you all the essential tools you need to operate in the modern world, right? You get a way to get paid, a way to buy stuff, and, a way to borrow for those huge life moments like buying a house. This stuff, it's the absolute foundation for everything else we're going to talk about.
Okay, so that's what your bank does for you. But if you ever stop to think, what do they do with your money once it's in their hands? How does a big building just holding a bunch of deposits actually make any money? How does it become a business?
Well, at its core, it's actually a really simple but super powerful idea. Banks are basically just a bridge. They connect people. So on one side, you've got people with extra savings, money they don't need right this second. And on the other side, you've got people who need that money, maybe to start a business or buy a house. The bank's job is to build that bridge between them. And that constant flow of money across the bridge, that's literally what fuels economic growth.
And this is where the real kind of magic trick of banking happens. See, when you put your money in the bank, to them, your savings are what's called a liability. It's a debt they owe back to you. But here's the clever part. They take that liability and lend it out. And suddenly, it becomes an asset for them, a loan that's earning them interest. And their profit? It's all in the gap. The difference between the low interest they pay you on your savings and the higher interest they charge the borrowers. That's the whole game, right there.
All right, you with me? Let's zoom out a bit. We've gone from your personal account to how your bank works as a business. Now we're going to go up another level, to the national scale, and look at the institution that's in charge of the whole system.
Yeah, so the central bank. The easiest way to think about it is that it's the bank for all the other banks. So places like the Federal Reserve here in the US or the Bank of England in the UK, they're not going to open a checking account for you. That's not their job. Their job is way bigger. It's to make sure the entire country's financial system is stable and running the way it's supposed to.
And believe me, their role is absolutely critical. When they adjust interest rates, that directly affects how much you pay for a car loan or a mortgage. And maybe most importantly, they're the ultimate backstop. They're the lender of last resort. This means if a bank gets into serious trouble, the central bank can step in to prevent a panic and stop the whole system from collapsing like a row of dominoes.
Okay, time for our final and biggest zoom out. We're going global. Because, let's be real, in today's world, money doesn't just stop at the border. It's constantly zipping around the planet through this huge, incredibly complex global financial network.
This is really where you see banking on a massive scale. Think about it. If a company in Germany needs to buy parts from a supplier in China, or even when you just order a t-shirt from a website overseas, how does that actually work? Well, it's the banks that make it all happen. They're the ones behind the scenes handling the super complex job of exchanging currencies and sending payment info all over the world.
And sitting right at the heart of this whole global system is a market that is, well, it's almost impossible to wrap your head around its scale. It's where the currencies themselves, dollars, euros, yen, are all bought and sold.
Get ready for this number, $1.5 trillion. And just to be clear, that's not a country's GDP for a year. That's how much money is traded on the foreign exchange market every single day. It's just this colossal, nonstop river of money flowing between countries, paying for absolutely everything, from crude oil to your Netflix subscription.
So you might be wondering, how does a bank in, say, Tokyo actually communicate with a bank in New York to make a payment happen? Well, a huge piece of that puzzle is a system called SWIFT. Now, what's interesting is that SWIFT doesn't actually move the money itself. It moves information. It sends secure messages about the money. The best analogy is it's like a super secure global postal service just for banks, making sure the instructions, pay this person this much, get to exactly the right place every single time.
Okay, so we've got this massive, super fast, interconnected global system. It's incredibly powerful, right? But with all that power comes some pretty significant risks. So the big question is, how do you manage all that risk? How do you keep the whole thing from just collapsing?
Well, the first and maybe the most obvious one is called credit risk. It's exactly what it sounds like. It's the risk that someone who borrows money just can't pay it back. And every single loan, whether it's for a few dollars on your credit card or a billion-dollar corporate loan, has this risk attached to it.
Next up, you've got something called liquidity risk. This one's a bit trickier. A bank can look totally profitable on paper, but all its money is tied up in things like 30-year mortgages. It's not cash they can just hand out. So what happens if a ton of customers show up all at once demanding their money back? The bank doesn't have the physical cash. This is what can trigger a panic, a classic bank run, and it can literally destroy a perfectly healthy bank in days.
And the third big one is market risk. This one is all about the investment side of the bank's business. If interest rates suddenly shoot up or the stock market takes a nosedive, the value of all the things the bank owns, its assets, can just plummet. And that can create huge, completely unexpected losses.
So to deal with all these risks and to stop one bank's problems from causing a global meltdown, regulators from around the world got together and created a set of rules. They're called the Basle Accords. And you can think of them like a global safety code for banks. They're designed to make sure every bank is strong enough to weather a really bad financial storm. And this framework really rests on three main ideas, or pillars. Pillar 1. Banks have to hold a certain amount of their own money in reserve, a minimum amount of capital. It's like a safety cushion, so they have some skin in the game. Pillar 2. You've got regulators who act as watchdogs, constantly looking over the bank's shoulders. And Pillar 3. The banks have to be transparent. They have to disclose information so that the public, the market, can see how risky they're being. It adds another layer of discipline.
So there you have it. From that simple cup of coffee you bought this morning all the way up to trillions of dollars flowing around the globe, we've seen how this incredible, mostly invisible system connects all of us. But it leaves us with a really big question, especially now. With the rise of digital currencies and new kinds of global crises popping up, you have to wonder, as the world of money changes faster than ever before, are the rules we built for the past going to be strong enough for the future?